Joining us now to talk more about the markets and looking at how to invest right now, David Wright, Sierra Core Retirement Fund Portfolio Manager, along with Lee Eugene Munson, Portfolio Asset Management Chief Investment Officer. Gentlemen, good to see you.
Thanks for having us.
Thanks for joining us. You think it's time to raise cash aggressively?
Absolutely. That's what we were doing today. We took money off of Brazil, some of our shipping positions we sold today, and just earlier when I got off the plane a couple hours ago, we went long a lot of treasuries, and I'm also looking to sell short any rips in gold as well.
I was judging from some of your notes. It sounds to me like you're approaching the market right now as more of a trader rather than as an investor. Do you need to be that way in your thinking between now and the end of the year?
Absolutely. I think the only way to play markets right now until we get news from earnings season is to play these trends. The important thing for investors to understand, are you in a market that's trending or are you in a market that's in a counter trend that has support and resistance? I think gold right now, I think it's going to break down, where there's some other good quality stocks that might just be in a channel. So I think you just have to identify it, have a worldview, but I say trade the heck out of it and eat people's lunches.
And that's the complete opposite to really where you're standing, right? Isn't that right in terms of looking long term?
Not particularly. We're not long-term holders. We're in and out of any asset class twice a year. We're not nimble traders, but we are very defensive right now.
So tell me how your portfolio looks today.
Our biggest holding is preferred equities, and that's our only equity holding right now. We have a lot of floating rate income. We have high yield corporate bonds. We have high grade corporate bonds, and probably a short-term position long in a commodity fund.
Lee, how do you see the dollar right now, this strengthening that we've seen over the last few days from the dollar? Is this a long-term trend or a short-term trade?
I think it's a short-term trade. I think long-term we're still going to see some weakness in the dollar. But I think what is interesting about this week, especially last Friday, was that everybody seems to be looking at gold as just being diverged from the dollar as a trade. I think once people realize the dollar's going to bounce, you're going to shake out a lot of these gold bugs, and then I think the dollar will continue on its longer-term trend downward.
But are you saying then, if you think we're into this continued dollar weakness then, that commodities are a place to put money now?
I do, but I think the most important thing for investors to have a worldview, whether you're an investor or if you're a trader, is to understand two things. The ratio between the emerging market and the developed market, who's eating what faster, like copper and aluminum, emerging markets love it, but then what the utilization, how much supply can come on. So for instance, in copper and aluminum, it's very interesting. Emerging markets love it, but copper, there's not a lot of supply that can come on. Aluminum, there's tons of supply that can come on. So as a trader, I have to have that long-term worldview, just like Dave does, but I tend to want to turn it over a little bit faster.
What about that, David, in terms of your holding in gold and other commodities? What would be the red flag for you to feel like you need to take some money off the table?
We're trend followers. We have a very strict sell discipline, so we have a trailing stop under everything. Right now, we're getting ready to buy the dollar. We think it's going to be a multi-month trade.
But what about the idea that, oil has been down for what? Is it 5 days now? Gold has been down for a couple of days?
We're very close to a sell.
I mean, you've also had some, basically exactly what Maria's saying. I mean, as the volumes have dropped a little bit, some of those leadership groups, whether it's energy, gold, commodities, technology, financials, have started to wane a little bit. Is that also what's going to keep the market from going anywhere, let's say, over the next 4 weeks?
The stock market?
Yeah.
The stock market is simply out of fuel. Breadth is narrow, volume is narrow, all the speculative juice is there. The consensus of traders is unprecedented. It's the same enthusiasm and bubble atmosphere as in the summer and fall of '07.
What kind of a 2010 then are you looking for?
Negative equities.
Negative equities.
I'd probably say we're going to be sideways. I'd probably say that gold will probably outperform the S&P 500. And I'd probably say that if you can find the right patches in commodities, I think that you can make some money on things like Freeport-McMoRan and some of those commodity trades. But I'm with Dave. We've had a month now, Dave, where, guys, the market has not made new highs. I mean, you look at the advanced decline and all those classic taper reading indicators, and there's just nothing there. So I think that we could see a bottom within the next week, and I'm looking for more downside. I'm net short right now in my investments.
But David, I mean, you say you're weaker on equities into 2010, yet we're in a low interest rate environment. I mean, the table is set for the market to go higher, is it not?
All the good news is out there, and all the good news is in the pricing.
But what would you say about the liquidity that's going to come into the market? Are you concerned at all that a lot of the cash isn't going to just raise securities, even if it's just a facade, even just the veneer of economic activity, because of the amount of money that we're printing?
The bulk of the cash seems to continue to want to chase bonds. People are really worried about equities. It's the beginning of a major sea change in attitude toward equities. The last 30, 40 years has been really unprecedented in enthusiasm for equities, both institutions and individuals. And I think cash is going to go elsewhere.
Gentlemen, thank you. Great conversation. We appreciate it. Good to see you both. David Wright, Lee Jean Munson. We'll see you soon, gentlemen. Thank you.